Welcome back to Rockstock Channel. It is Monday, August 8th, Q&A with Rodney Hooper. So we're going to concentrate mostly on lithium, make a few other comments elsewhere, but I just published today my latest lithium bull called Fat Bottom Girls. You make the rockin' world go round. I think the bottom is in. Rodney, we've had a lot of earnings come out, Mineral Resources, Pilbara, and most recently, Albemarle and Livent had their conference calls, and you made some prescient comments that I incorporated into our lithium bull.
For all of them, they've shot the lights out. The reality is that lithium has remained resilient despite Chinese lockdowns for COVID, and the latest lithium prices coming out of China are moving up. I did flag it in a couple of tweets. There is some maintenance shutdowns that happen now, but typically Q3 is a quieter quarter, and then Q4 takes off again. But we're seeing prices moving, so there's every chance we could test 500,000 renminbi for carbonate and hydroxide in China and set a new record. In Albemarle, they literally are almost doubling their adjusted EBITDA for the year, an incredible number. One thing that I did find interesting is that even though we're already in August, they have still got quite a wide band on what volume growth they'll have for the year, 20 to 30%. And it turns out a lot of that comes down to tolling. So if you look at their chart, tolling is where they're at. And this raises a very important point. The Chinese converters who don't have access, I noticed SP Platts in their commentary from Friday said there's talk that some converters have shut down because they do not have spodumene. It looks as if Chinese converters are being forced into either tolling or paying up for spodumene. And you're seeing that in the Pilbara auction. So the question is, maybe is that why might we have a disconnect on Chinese converter prices, which they were running and now they're sort of easing off because they are having their margin squeezed and there's nothing they can do about it. The numbers out of Albemarle and Livent were fantastic. As with Pilbara, it's got lots of cash on hand. The guys are guiding up again to the end of the year based on a flat price. Livent and Albemarle are sold out. They're telling you as much. Their book is full to the middle of next year or end of next year, which means people are going to be scratching around. So that only leaves you with spodumene to surprise. And we know how difficult this is. I thought I was conservative with Wodgina. I'd actually had it higher, and I've cut back my forecast to 150,000 tons for the year. And Ken Masters said it's going to be marginal or not much at all. Despite restarting those trains, how much is going to be available? So it looks to remain tight, which means earnings are going to be good. We can expect to see more upward revisions, I think, as they move forward and certainly into next year's guidance. And the numbers, BYD came out with cracking numbers for EV sales in July. So they are on track, and so is Tesla. So there's certainly no pullback in demand. Europe is a little bit softer, and I warned about this before because CO2 penalties stay flat between 2021 and 2025. So they are not forced with the stick to sell more EVs to avoid penalties. They can just sell what they did last year. So they're not under as much pressure. It's more customer demand. But China's going gangbusters, and the US and rest of the world outside of Europe is as well.
I believe that there's a spodumene duopoly. Basically, Pilbara, the Marble joint venture with Albemarle and MinRes, which control essentially, Greenbushes and Wodgina and Mineral Resources is in Mount Marion. The discipline that all those companies imparted after 2020 with MinRes and Albemarle mothballing Wodgina, and then Pilbara buying and then not keeping in production the Altura mine, that as much as the increase in demand has resulted in these very tight markets. Do you agree with that there's an underpinning of control and the value is with spodumene mining? Do you think that can continue, given that there are other, spodumene mines coming online?
Pilbara is looking to do its own JV. Albemarle and MinRes are only allowing the marble material to go to tollers until they are ready to take that material in China at their the plant that they've just bought, and then the new greenfield that they're going to build. They are controlling the end market. So you've got Core coming online, yes, and you've got Sigma coming online, but are we going to see more spodumene concentrate mines do their own contracts with Chinese converters and make them toll? You know, you look at MinRes, you know, I think you mentioned it in a commentary we had about where the margin sits. In the end, they're giving the material to Ganfeng to toll under an agreement, but Ganfeng's a qualified supplier, so they're getting the full Chinese spot price, which is what they showed in their earnings, if I recall. If you can tie up and toll with a qualified converter, then you can decide on what the margins are. I guess that the boot will be on the other foot if you get a whole lot of spodumene mines that decide to do it differently, but we know there's conversion capacity in China. If it's qualified or what have you, I think the negotiations are going to get tougher. So the only way to go around this is to do something undisciplined. And who will that be? Well, AVZ's in court, isn't it? You've got Ganfeng looking to press with Goulamina.
Lithium.
So that'll come on. Yeah, but that's, you know, that's a finished product rather than spodumene. Where will the undisciplined spodumene come from? So the sort of knee-jerk reaction was this whole lepidolite and all of this stuff in China, which is going to be a hard ask, but I guess it could give them their own route. They don't have a lot of decent spodumene available. So you've got to pick those pinch points of where is it going to come through? And I guess Ganfeng is trying to find its own way back into the market. But again, the second and third tier converters, you know, BYD, the talk of 6 mines or what have you, well, where are these mines? What is the size? How long would it take for them to get up and running? You know, near-term producers are then hot property, which is why, you know, we represent and we unashamedly like Atlantic and some of the others, because, you know, to get access to quality material that can ship out, you know, because the other thing is grades have been slipping, is, you know, getting back to decent material that, you know, that they can process. You know, there's not a lot of players that are there.
You mentioned Atlantic. We believe they can get into production before 2025 of spodumene. Piedmont and Sayona are expected to do so. Lithium, I guess that's the Goulamina mine, you know, is expected to do so. Those companies we just mentioned, we think could re-rate in the same way that Core Lithium and Sigma have. You know, both Core and Sigma are now in the top 5 of the developers on the lithium equity scoreboard. So as you said, I think 7 out of the top 10 are hard rock mines among the developers. Strangely, I mentioned in my note, AMG, Advanced Metallurgical, which we talked about, Freebird Lithium, they're producing spodumene 90,000 tons a year, and they have upgraded their guidance for the 3rd time in their earnings results last week, in the same way that Albemarle has. And you know, that stock it's not really moved. So we think that that's you know, it's less than 800, or it's about 800 million, you know, market value.
And they're expanding production.
And they're expanding to 130,000. Plus, they have the most credible European downstream hydroxide, you know, operation of any of the companies that want to refine, you know, in Europe. You talked about discipline and undisciplined, you know, in the spodumene market, which reminded me, you know, back in, you know, the last bust, everyone talked about this oversupply. You know, in 2018, 2019, we characterized it more as an under demand, which I think we were, you know, right to talk about. You know, China had, you know, slowed down on the EV subsidies, and then you had the trade war under Trump, and a whole host of reasons. You had this, you know, under demand, but you also had undisciplined SQM among the, like you're seeing in Pilbara and Albemarle and Mineral Resources, you know, disciplined behavior, but you had massive, you know, ramp up of, you know, low quality technical grade carbonate from SQM, who talked about, oh, we just got to do market share into China. Is there a risk that they can continue ramping up, you know, and spoil this, you know, high price party? Because you just talked about it's unlikely that they'll be undisciplined spodumene to kind of like wreck what I think is the driving force of lithium is spodumene prices. It's not so much refining, and the power is with Pilbara, and Minres and Albemarle, in my estimation. So do you think SQM or any brine participants can spoil that party?
Brine definitely has its place, and it's going to be helpful. Again, you've got to sort of have a look at early stage production coming out of new brine is likely to be non-battery grade. So again, I read different reports and brokers about what their estimated supply numbers are. And I think the problem is they don't, a lot of the time, they don't understand the reprocessing that has to happen to that early stage material coming out of new brines. Can they spoil the party? No. Again, we have a sort of fairly clear line of sight as to what volumes are going to come out. It's always going to take time to ramp and to qualify. And I think brine, has an important place in filling up supply. But again, are there any hidden sort of huge volumes? Look at POSCO with Sal de Vida. Where are they? They're nowhere. Look at Rio's with Rincon. I mean, they're doing a pilot and a test, and then they'll do this, that, and the next thing, and then they'll be at full production in 2029 or something. So there are no surprises.
Another topic I didn't get right about, but I'm just thinking about it, is the commoditization of the specialty chemical lithium market from an earnings multiple perspective. So you've had Albemarle increased their guidance by $1 billion, like a full $1 billion last week. The stock barely moved. So by definition, their EBITDA rating plummeted, right? To like 8 or 9. So for years, I've pointed out, Tangshi and then Rockwood bought Talison, it was like 15, 16 times EBITDA. Then Albemarle bought Rockwood, in 2014, 2015, and that was also 12, 13, 14, 15 times EBITDA. And so that's always been in the back, that's what specialty chemical companies trade at. And, we have rising interest rates, but interest rates are not higher today than they were when Albemarle bought Rockwood. And inflation was lower then. So actually real rates were higher back then than they are today. So to the extent that, multiples are going down because people think interest rates are higher and therefore the multiple should be lower, that argument doesn't wash so much. But I've been doing some research into mineral resources, and I looked at a Goldman Sachs note on mineral resources in April. And then I looked at the same analyst wrote in July following mineral resources great results. And I think he upgraded his guidance for mineral resources, but when he put a multiple on their lithium earnings, he lowered what he thought the multiple should be from 12 or 10 to kind of 7 or 6, right? In line or not much higher than the multiple he was putting on the iron ore earnings. Or actually the iron ore earnings were ridiculously low. He said my valuation is 3 times. Is Wall Street or the buy side suddenly saying no to 15, mid double digit, EBITDA multiples for lithium producers? It should just trade iron ore companies or steel companies or aluminum companies.
Yeah. So we've done a little work on iron ore recently, and if you go and have a look at the forward curve on iron ore, which runs out about 3 to 5 years, it's always in steep backwardation. So if you looked recently, even at 120 or 130 iron ore, you go out 2-3 years, it's 80 or 70. That is, I guess, because of that transparency, people say, well, you're at top of the cycle or too high, and therefore that 3 or 4 is actually 6 or 7 for iron ore. Pick your number.
It's a fear that I have that there is this derating, and I've talked to a lot of people about it, and I'm still on the side that they will re-rate upwards. And in fact, commodity prices are so underweight that, if someone's putting a 3 times multiple on Rio, it should be 6 or 8 times. So I think it's the traditional commodities, steel companies that are trading at way too low valuations and should re-rate upwards. No commodity has 20 to 30% growth that we're having in this industry, Albemarle is looking to grow from 100,000 tons to 500,000 tons of production,
Yeah, that's a very good point.
over the next number of years.
Far higher than iron ore or anything else.
Which is just a cyclical, supposedly in line with GDP. So higher multiples should be there for their growth companies. This is a growth industry. That's number one. And number two, Elon Musk keeps talking about lithium. Like, M&A is going to happen, and M&A multiples should be supportive of this sector in the way that in the last super cycle in 2006, 7, 8, you saw major acquisitions like Rio Tinto buying Alcan. I've speculated, Rio could buy Albemarle at some point, but the valuation multiples don't so much make sense. There was some speculation on Twitter today that Rio might buy Pilbara. I continue to argue that they're more likely to buy Livent because they'll need help with their Rincon in Argentina. And I was just in Quebec, and Rio Tinto is all over Quebec, in the aluminum space. So if you can buy Nemaska for free almost, within Livent. So Rio Tinto working, has lots of hard rock expertise. They don't need to buy Pilbara. The mining is not as hard as the chemical expertise is. So I think that's just a more likely scenario. And when we were visiting Nouveau Monde, and I was in Bécancour, wrote about this, as well as we visited Calgary and E3 Lithium. These will be subject of future commentary. I saw Rio Tinto's kind of technical center in Bécancour. And overall, Bécancour, the ABCs of Quebec, anodes, Bécancour, and cathodes. POSCO's there, BASF is there, Nouveau Monde is there on the anode side. Nemaska is going to be building their hydroxide plant there. That is a really cool, hub for midstream. M&A should be supportive of valuations. Growth should be supportive of valuations. And just the last commentary, that the Inflation Reduction Act looks like it's getting passed. As it pertains to critical raw materials, this is a much more scaled down version of what they were anticipating, the multi-trillion. But the fact that EV subsidies, and then Manchin talking about permitting reform, but also local content for minerals, that this stuff has actually made it into a much slimmer down bill is pretty impressive and supportive of the thematic that we're talking about here, right? Like, and Wall Street is going to follow those tailwinds. So I said in my note today, the Inflation Reduction Act is going to result in a reinflation of equity valuations across the battery materials space. Any further thoughts?
Another tailwind is China is extending the tax break or what have you until the end of next year instead of the end of this year. So they've lengthened that out. There's quite a lot of stimulus going on. The DOE, Jigashaw, getting behind, I guess, reinforcing beyond this act will also be helpful. Underpinning it all is a consumer willingness to shift to EVs. You look at surveys, more than half of people now are saying they're considering an EV for their next car or what have you. So the thematic is now fully mainstream. They've got a whole lot of criteria in terms of the credits for requiring localized supply. So they need to get behind permitting as well.